Okay, brilliant. Welcome everyone back on the Financial Fox live streaming on smart investing, stock, shares and crypto with Clem Chambers and Zach Meir. Zach is joining in a second. Clem, thank you so much for joining.
That's very good. And thank you very much. Now, I've got to make an apology. I may sound rather like an investment banker or a rock and roll star, but actually it's pollen season here. So what you're hearing is powder coming off trees, not off little bushes in Colombia. But I sound a bit suspiciously investment bankerish.
Listen, did you have also the Sahara wave?
I've got a layer that thick of sand.
Yes.
And my darling wife said, I'm going to rub that off. And I said, yeah, let's abrade the car with finely grained sand.
Yes,
so once it stops, I mean, it's now like the sky's normal, but for like 3 days, it's been, like this actually the same color as your jumper.
Yeah,
it's been
wow.
Purple haze, and as earth of Carthage rained down upon them. It's been biblical times, really.
Yeah,
war,
exactly.
famine, raining earth from Carthage. I mean, what next? Plague of frogs? Oh, that wouldn't be so bad. Yum. And then all we need is a plague of escargot, and it could get better.
Well, it looks like a biblical time. It's quite interesting that you mentioned that, because we are seeing, everything is happening, and finally the Fed raised interest rate, which is, we were expecting that, but
I find it hilarious because I keep reading all these articles saying, oh, they've got it wrong. There's inflation. Oh, they've got it wrong. It's inflation. Oh, they should do this. Oh, inflation. It's like, don't you think they might be doing it on purpose? I mean, since when has inflation never been a government policy? Inflation is never accidental. Do you think it's accidental in Turkey? Do you think it was accidental in Venezuela and in Zimbabwe? They had to do it. Was it accidental after the Second World War in Europe? Was it accidental after the First World War in the UK and Europe? Was it accidental in the Roman Empire? No, it is government policy. A direct result of government policy, and the government did it on purpose. They can solve inflation like that. But then where would they be?
Yeah, exactly. So, do you think they are going to be able to fight inflation with that policy?
Well, look, I just said they're not fighting it, they're making it. They want inflation. Not only do they want inflation, they need inflation. Who does inflation help? It helps people who have borrowed money. Who's the biggest borrower on earth?
The Fed.
Well, no, not the Fed, but the American government. So, who's up to their ears in debt? Whose budget deficits are so large that they're now getting GDP to debt of 120, 130, 160%. You can't, if you're a government, okay, this is something that needs explaining. If you're in government, your job is to grow the economy as fast as possible within the ability for you to tax it as much as possible, and by retaining, by not having runaway inflation. Yeah, so low inflation is good, 3%. So what you want is you want a 3% GDP growth, 3% inflation, and that keeps everything fine. Yeah. Now, if your growth drops, you cut interest rates, you pump money in, the growth goes up, you try to keep it there. Well, when disaster strikes, that's all going to go out of whack, and you're going to build up debt. Now, your ideal position, according to the Nobel Prize winners, that are obviously not necessarily that reliable, is 80% debt to GDP. That is the sweet spot for growth. If you've got no debt, you could have more growth because you could take on some debt. It's like human beings. You could buy a house if you could get the debt, but you don't want to buy a too big a house, so you go bust, right? So the optimal point for growth is 80%. And governments want optimal growth, so they need debt to GDP of 80%. Well, when the shirt hits the fan and it goes to 100%, they've got to bring that down. When it goes to 120%, they've really got to bring it down. When it goes to 140%, I've got to get it down. Now, you can go, let's do austerity, boys and girls. We know how that goes down. That goes down like a lead balloon. and you get fired, they go, no, 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 we need more spending on this, we need more spending on that, we need more spending on this. Well, oh, this austerity, I don't like that. No, I don't want any austerity. Well, actually, you're getting pay rises, but just not big ones. Oh, well, we want big pay rises. Austerity, oh, bad word. No, no, no. Remember austerity in the UK, how everybody hates it, right? So you can't do austerity. What are you going to do? How are you going to get that debt down? You're going to say to everybody, we're going to tax you twice as much, and we're going to pay off the debt. That's going to get you fired at the next election. It ain't going to work. And it crushes the economy. The economy goes into a tailspin. Everybody runs away and is scared. And you end up with an economic crater, smoking crater. You don't want that.
Clem, when we have austerity in the UK?
Well, up to about 3 years ago. Or the Tory party had austerity for yonks and yonks. And in fact, when Boris came in, he had like 100 billion of slack because of the austerity and because the debt to GDP was in a certain place. He could push it out. He had lots of blew it all up. But anyway, so now the way to get your GDP to debt back to 80% is inflation, because your debt is going up, but the value of it is going down. Your economy's numerical GDP is going up. The numbers are going up. When you have to pay 30% more for your Mars bar, that's a notch onto GDP as a number, not as real value, but as a number. So the numbers go up. Everybody's getting paid more, and they go, yeah, I'm getting paid more. Funny enough, it doesn't go as far, and they're confused because most people aren't numerate enough to do percentages, right? So nobody really noticed it, apart from the fact petrol's expensive. Oh, and everyone goes, it's short term. It wasn't us. We didn't do it. It's them over there. You know, so it's easy to cover up. It's you doing it, yeah. And your GDP goes up, your tax take goes up, your budget goes back into maybe 3% deficit. You keep running that until GDP to debt is back to 80%, because you're basically tearing up your debt 7 or 8% a year, 12 or 15% a year more like. But oh, we won't count it that way. Rip, tear. Oh, we're back to 80. Oh, okay. Oh, look, inflation's gone away. We told you it would go away, because we made it go away, because we went clunk, no more inflation. Yeah. So they need to get their debt to GDP back under 100% at least. And they're going to need to get it back to 80% over a period of time. Well, COVID, huge. I mean, think of it this way. Without doubt, a great deal of wealth was lost over COVID because of what actions that were taken. Somewhere between 10 and 20%, let's call it 15%. So everybody out there is 15% poorer, right? The world is 15% poorer. Everybody's 15% poorer. So how does that pan out? Well, you can do austerity and everybody's got 15% less in the bank. The house prices go down. They're taxed more. They lose their jobs. They go out of business. Right?
Well, and then war comes. Yeah.
But if your value of your money goes down 15%, buys you 15% less oil and petrol and cigarettes and wine and all that other stuff, you've actually lost 15% of your wealth. You don't really notice it. The numbers might even be bigger. You might think, my house is now worth £57 million. The fact it can only buy, 6 holidays rather than 9 that you used to buy, people can't calculate that. So governments can get away with inflation, and nobody else causes it. Nobody else causes inflation. Governments cause it, because if they don't print the money, then people get a pay rise, the company goes bust. Yeah, and then they don't get any pay at all. But if you keep printing more and more money, everybody can have a pay rise in numerical terms, not in wealth terms. The wealth doesn't go up, but the numbers go up, and then things rebalance. That's why there's always inflation after wars, because the governments rebalance their bankruptcy effectively back into normality over a period of 15 years. In the UK, it was from like early 1950s right the way up to the end of the 1970s to dig out of that hole that was caused by the Second World War. Yeah, but it's not created by someone over there. It's not created by workers asking for more money. Yeah. It's not created by any of that. It's created by governments increasing the money supply and demand. We printed more money. Funny enough, the value of it's gone down.
Clem, what that means for the stock market, this raise in interest rate?
Well, it puts it on a bit of a knife edge because, a high rate of inflation is quite good because after all, those companies are real and they do real things. And therefore, they're kind of like a commodity in a slightly more abstract way. So if you take commodities, gold, silver, or wheat, copper, zinc, nickel, they can't be messed with. You can't fix their prices. If you try, all of a sudden, there's no supply because people won't dig them up because they're not digging them up and losing money. That's what happens in your communist countries where they go, oh, price controls, the price of wheat must be, price of bread must be, and then suddenly there's no bread. Or bread prices go up, so they fix the price down here. And then politically they can't change it, and before you know it, everybody's buying bread at the bread shop and feeding it to their chickens. It's so cheap. And then all of a sudden the grain people can't make it anymore, and therefore you get no bread. You get that horrible, inefficient market situation. So markets price commodities at a rate which is basically fixed. It's about how efficiently people can dig stuff out of the ground and turn it into a commodity, and that can't be messed with for long. So when the value of money goes down, the value of commodities goes up. Yeah, companies are almost like that, but there's a lot more fudge room in there. If you make Louis Vuitton handbags, it's not like digging nickel out of the ground. Your margins are astronomical, and you charge what you can get away with. There's a lot more, fudge room in it. But nonetheless, underneath that, there's a real activity going on. So it would tend to keep up with inflation unless inflation was wrecking other parts of the economy, which can't operate efficiently with people not knowing what things are worth. The trouble with inflation, you don't know what anything's worth anymore. It was worth 3 Mars bars yesterday. Is it worth 3 today? Did they make smaller Mars bars? Is it going to be even worse tomorrow? You lose the anchoring of prices, and that's where the idea of inflation expectations come from. If people are expecting prices to go up, they'll chase the product and push the price up. Or the people selling it will go, well, they're expecting it to go up, so we'll put it up. And that can become a vicious circle. But if you don't print the money, it doesn't happen. Because if you don't print the money, people simply can't afford to pay that extra price, and then the price has to come down.
But as the price of product goes up, you also need the wage of the people producing those commodities to go up as well.
Well, not necessarily. If there's not money to be had, it can't be bought. And then people have to drop their price, or people go without. I mean, most people who are 19 years old will buy a Lamborghini. They just don't have the money. It doesn't matter whether the price of Lamborghinis go up or down. They haven't got the money. And so pricing is the open markets, and pricing is the most efficient way to get a fine price on it. Yeah, but it's supply and demand. If you increase the supply of money, then you'll increase the demand for things, and the price of those things will go up because the value of that money will go down. Because money's just a function of wealth. Wealth is not about pounds or yen. Yeah, that is just a medium of transaction between wealth. If you destroy wealth and there's the same amount of money, you'll get inflation. If you destroy money, the same amount of wealth, then the numerical value of that wealth will go down. And that's what the state we're in. If the value of money doesn't change much from year to year, then it becomes a stable platform for economic activity. When you get volatility in the price of money, there's another variable that scares everybody, another variable making it difficult for people to transact. But going back to the stock markets have real things for sale, amongst the big companies, for example. They're real businesses, and therefore they're quite resilient to quite high inflation. Go to Turkey. Turkey's had massive inflation forever, and they've got huge companies there that survive and prosper and do really, really well. And they have, millions of people employed in industry, etc., etc. So there are ways. It's just difficult if you have inflation. The reason places like Turkey have inflation is because they can't tax people there properly. Everybody's dodging their taxes. So the only way that they can tax people is through inflation. If they need money, they print it, and that's it. We're not going to come to you and say, can we have your money, please? We're just going to print money, and that will create inflation. So any money you had has been, basically we've stolen it that way. And that's the way that they get around the fact that their tax collection system isn't very good.
Talking about taxes, I just want to introduce this kind of thought that I had over the weekend. And I was thinking, because the government need to raise taxes because that's a way for them to collect money, and they can't really tax so much existing businesses because they are already struggling for COVID, they might be looking to tax new businesses like crypto, like gaming, like this kind of new businesses. So from one side, they are legalizing them, creating a regulation, so then they can tax them. So it's like a push and pull in a way.
Oh, let me come in there and just say that a good investment strategy is to put your money where the people in government put theirs, because they will not blow their own investments up. Okay, why would they? And if you think about that, you go, yeah, that's obvious, isn't it? Everybody in government has a house. I need to buy a house. Everyone in government has this kind of picture. I need to have that kind of picture, and so on and so forth. Government does what it wants to do. That's it. That's what government's there to do. That's why you have power. So you do what you want. And, a lot of it is about people who want to change things. But most of it's about people who just want to have a job and then retire with a fat pension. Yeah. That turns into the following. Governments don't tax what they need. They tax everything they can. Full stop. And then they spend the money. And then they borrow some more. And then they spend that too. They never say, this is our plan. We need this much money. Mm-hmm. And if you get that much money, we're not going to take any more. They go, how can we maximize how much money we can get? And then we're going to borrow more, because that's a tax on tomorrow. So we get as much money as we can for what we want to do into one place, and then we spend it. They don't go, oh, well, we've got all the money we need. We don't need any more. We're not going to tax you anymore. They get everything they possibly feel they can get, and then they take more by borrowing. Yeah, and then they spend it. Yeah. So it doesn't. They don't look at it like you're thinking about.
Yeah,
it.
like
they've already taxed absolutely optimally what they can tax.
So, okay, so it's basically not kind of like a plan to tax crypto, but maybe because the institution came into the space last year, then they start to say, okay, this is an area that we need to start taxing.
Well, I don't think that's the way you're looking at it at all. They will look at it, crypto. First of all, government has this thing. You've got to think about the way that it thinks. It thinks, is it work? Is it risk? Yeah, so they look at crypto and go, oh, blimey, I have no idea what's going on here. Can I just avoid it? Yeah, and then when it gets, now it's looking like a big, big risk. It looks like I might get in trouble here, so I better do something about it. Yeah, and how do I do a small amount as work as possible? Well, I'll hire some people to do it for me, for example, or I'll just say, stop it and hand it over to the police.
Yeah.
Yeah, so as little work as possible and as little risk as possible. So they look at it and they go, well, yeah, the police don't want to do this because they have no idea what one of these things is. And, oh, well, it's not that big of a problem. We'll let it go. So it's only when it gets to be a risk to them. And what you've got to realize is that most people that work in government, there's only one thing they care about, and that's their pension. That's all they care about. They don't go to work to change the world. They go to work to shuffle some paper and go home. And if you get on a train at 10:30 and you go in the first class compartment, it'll be government employees going to work in that compartment. And if you get in the train at 3 o'clock and you go in the first class compartment, it'll be the people there will be government workers going home. All they care about is their pension. Anything that threatens their pension is something that they won't like. And crypto, which is a way to get around the financial repression, maybe, blah, 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 blah. They don't like that. So, and therefore they're worried about that. But when it comes along to the fact that they don't actually embrace it, they're going to have the whole system is going to fall back into behind other people. Then they get scared about it, because it is a way of making large amounts of money for tax, which is going to go a lot to their pensions. They'll go, yeah, we'll have that. And now they realize it's going to be a big cash cow. They're turning around to thinking, well, it's a good idea. We can get large amounts of money from that. Maybe we shouldn't say no to it.
But the question would be, in order to tax it, you need to understand it to tax it correctly. Otherwise, you can't regulate something without knowing it.
Well, they're not stupid. and it's the self-interest is applied. So they'll be focused on it, and that's what government should be, focused on what works and what's good.
That's why they are hiring, head of crypto. And I think the FCA recently posted a job for a new crypto department.
Well, I think the UK regulator is extremely hostile to crypto for now. And, a lot of MPs have come out and said, we've really got to get on this game because this is important. But, people like the banks, you see, it puts the banks out of business in the same way as the internet put the newspapers out of business, pretty much. And therefore the banks are looking at it and going, hold on a minute, we're paying you billions in fines and regulatory stuff. And you're telling us we can't, blow our nose on a Wednesday, and we can't do this, we can't do that. And these blighters are running rings around us and you, and they're not giving you any money. And they're going to put us out of business because they do what we do a lot better and a lot cheaper and a lot cleverer. And, we'll have to do all sorts of really difficult, risky and expensive stuff to keep up with them, which they already have done quite a lot of that, which is really good news. But, the banking system, and you can see in America, what are you playing at, regulator, letting these buggers put us out of business? How many billions do we give you every year? We're a key part of your financial infrastructure, and we're going to go away unless you shut these people down. And the government goes, well, if you shut them down, we're going to be in the dark ages, and we're going to have a bunch of people we hate that cause us trouble, i.e. bankers, carrying on doing their nefarious acts. But on the other hand, I see what you mean. So the UK has gone to the side of the banks, which is shut this stuff down, slow it down, stop it. And, America has flipped it. I mean, Europe nearly banned Bitcoin this week.
Yeah.
But they went, no, if we do that, we're just about to shut down a huge, fantastic technological advance because a bunch of communists don't like it. And funny enough, they don't like money either. And no, we're going to keep that. But touch and go, right? Touch and go. Because once the technology engine is out, that's, if you push it away, you fall into the back, you become an economic backwater.
Yeah, perhaps they are going to start to focus now on crypto mining, which is kind of underpinning their concern about, proof of work, energy consumption.
Yeah, but I mean, that's just one of those things that doesn't bear to look at.
Yeah.
I mean, so if you've got a crypto miner, you stick it in your greenhouse and you grow your vegetables or your orchids in the greenhouse. And then
near the machine. Exactly, near the machine, near the Bitcoin machine.
It just takes electricity and turns it into heat.
Yeah.
And you should be able to get two things for the price of one: your banking system and all your heating all thrown into one output. But that's to come, probably.
Yeah.
Or not, as the case may be. But it's an emerging technology like the internet was, and like silicon chips were. And if you don't get on that bus, you're going to be left in the backwards. If you look at the history of Europe, the reason that Britain became not a backward, which it was at the time of, say, Henry VIII. I mean, when Spain was a dominant power, and France was later on the dominant power, is that the English got technology through the Industrial Revolution, and they crushed everybody in Europe, because in Europe they were busy running around going, oh no, we like peasants, we don't like this dirty stuff. No, that's bad. And if you look at all the speed of industrialization in Europe, the countries that became backwaters and dust bowls were all the countries that turned their back or didn't embrace technology. And the ones that did, the Germans and the British and the northern countries, became the absolute dominant players on earth.
It will be interesting to see, how is going to be a rebalance now, in which country are going to push for crypto more than others. So then maybe the power structure is going to change.
Well, we've got to survive the Third World War first.
Yeah, exactly.
Anyway, Zach, hi there. How's it going?
I'm surviving the Third World War at the moment. And I think from what you're saying, that, I mean, literally, and this Ukraine thing underlines it, all these systems and all the rules and regulations that we've had in place have all failed. The system to prevent, financial collapse failed in 2008. We'd already had 20 years of financial regulation by that time, post Big Bang and all the other SECs and FCAs and FSA and all the other stuff. All systems in place to prevent a war. failed not only in Yugoslavia, but obviously failed now. And then all the green energy thing, all that sort of transition rubbish, that's completely failed as well. All those big initiatives have failed.
Well, I mean, you don't see the wars that didn't happen, do you? You don't see the financial crises that didn't occur. So there's a balance between a system that breaks down every 10 years and a system that breaks down every 10 weeks.
I don't believe that that's the case, and I also think that if you've got the damage done to all, to the system by all this over-regulation, red tape, in the HR and the all the sort of death by employment laws and taxes and all the things we haven't prevented anything happening anything bad happening in a material way. I mean, it's a complete waste of time, and all the green.
I would say it's a cyclical thing.
The reason that Putin could invade is because of the green energy initiative. That was the result of that. Thank you to Greta Thunberg. Thanks for that. So it's all these things have such horrific consequences over and above the fact that we still have so many autocratic regimes around the world, which we prop up. China, Iran, obviously the Russians, the Middle East, all over the place. There's just we've got all these rules for the West, and none of them apply outside the West. So it's completely useless.
Well, I wouldn't say completely, and I wouldn't say totally useless at all. I mean, if you read your history books backwards, you'll see that it gets worse the further you go back in time and the further there is no regulation.
I think the war in Ukraine has proven how useless reading history books is. It obviously does not work at all as a. What's the point of learning about history if you can repeat the same blunders again and again and again? There's no point.
Because it's human nature. I mean, people.
Surely, I don't agree with Zach's premise. I think as a person born in the early 90s, as a person born when I was born in the 60s. I've gone all my life without experiencing a war. And I don't think there's any other person who is 15, whatever, called it 60. If you took a 60-year-old and went back in time, you'd never find one that wasn't involved in a major war, ever. Yeah. And it used to be not just wars in over there, it'd be here. There'd be, go back far enough and you had civil wars. I mean, we had a civil war in 1666. We'd pretty much a War of the Roses that went on forever and ever. And go back to history and it's civil war. Oliver Cromwell versus Charles II. They were even local, and then they get a bit less local. But the quantity, we never had it so good. Millen would say, never had it so good. It's not perfect or even great, but it's way better than it was. 1920, 1 in 5 children died in childhood before the age of 5, and your life expectancy in somewhere like the UK was 50 or something like that. Or Orwell, not Orwell, the guy that invented the aeroplane.
Right.
He ate an oyster in 19. Yeah, what was that again, Zach?
One of the Wright brothers.
Yes, the Wright, Orville Wright.
Yeah.
He ate an oyster and died. He wouldn't eat an oyster and die today. And he's the guy who invented the aeroplane. In 1920, he died. He ate an oyster and died. Because that's how brutal life was only 100 years ago.
Well, I feel so safe now.
I've
got to step out for a couple of minutes, Steffi. So I'll be back in a sec, okay?
Yeah, sure. Zach, I'm gonna carry on with you because we talk about obviously the Fed finally starting to rise interest rate and the effect that it could have on the stock market. Is there any specific takeaway that you got from yesterday announcement and anything that you are looking forward or you are concerned about regarding the stock market and trading?
Well, I think the Fed raising rates yesterday was the most stupid thing you can do. Having spent 12 years lowering rates when they shouldn't have been, now they're raising rates when they shouldn't be. So that's mistake number one. I think that luckily, obviously, rates are so low at the moment that they can keep doing the rate rising activity and probably trash the US economy and other places as well. Hopefully, interest rates won't have quite the same impact as they used to have, because the economy is not so interest rate. I think it's not so interest rate dependent, let's say, in terms of, let's say, the tech sector or this or that. I mean, various parts are not. It's a much more broad economy now than it used to be even 20 or 30 years ago. Hopefully that's not the case. But even if it is the case, the Fed policy, and I think that whole system of central bankers deciding these things independent of government, I think actually is a mistake. I don't think that was a good idea when it came in, I suppose, late 90s or whatever it was. I don't think it's a good idea. And I think that the central banks have too much control. They're unelected people. And I just don't think things should be done that way. If we have massive inflation and we have the consequences of Russia, Ukraine, there have a lot of companies losing a lot of business, and that's exactly the wrong time to raise rates. So I think it was madness.
Yeah,
it's down to liquidity rather than rates. So if you've got let's take us. We want to borrow money, get our credit card out. What's the rate on that? 19%, right? Go to the bank and we say, lend me 20 grand. I want to go on a wild spending spree. And they'll say, no, you can't have it. Unless you've obviously got collateral. But just say you don't have it. I say, no, you can't have it. So you don't go on holiday. Or in a company, the company goes, I want to borrow 100 grand to cut my cash flow out. Bank says, no. And you go bust.
Yeah.
So it's the availability of money, not the interest rate.
I don't think that liquidity tsunami there was after 2008 really trickled down properly to the average person in the street.
Well, it's not meant to. It's not meant to trickle down to the man in the street. If you do that, you get inflation. It trickles down through the system to give everybody, the whole system, a lift. Starts at the top with the rich and goes down slowly through the system so as not to create inflation. And that's why they do it that way. The moment you write checks to people that haven't any money, you get inflation, which is what you're seeing in America and the world. Because they wrote checks to real people. And real people not only need to spend money, they want to spend money. And that's all they've got. They'll go out and they spend it. And prices go bang. And they did. And if you give it to rich people, they go, yeah, I've got quite a lot of this. Yeah. And they put it in the banking system and the bank kind of filters it out slowly. And it doesn't get to the bottom. It's not meant to get to the bottom. As Jesus said, the poor will always be with us. But if you give the poor people money, they go and blow it and you get inflation, which is why if you have a ever increasing gap between the rich and the poor, it's deflationary. Recognize that? And then when you start to squeeze that difference, as has happened over COVID, you get inflation. Recognize that? So governments do not want to give money to the poor, apart from the socialists, etc., because that is inflationary. Unfortunately, because I'm all for charity, etc., and I'm all for poor, less well-off people doing better. But if you give money to people that not only want to spend but need to spend, then you get your demand-led inflation.
Clem and Zach, let's maybe move to more like risky assets and what consequences of these.
What, you mean all assets right now?
Yeah, exactly. But I wanted to focus maybe more on, for example, cryptocurrency. What is going to be the consequences of this rising interest rate on crypto?
Well, first I've got to say, I was talking to a fan of your show, and they said, there's two things that happen on your show. One is I time how long it takes you to mention the Roman Empire. And last week it was 3 minutes, 57 seconds. And then I time how long it takes for Steffi to say, but what about crypto? So anyway, I think that was about 17 minutes. Oh.
Okay, it's just I think it's important because a lot of our viewers, they want to know, should they feel they might not in crypto right now. They feel, what should I do? Should I buy? Should I wait? Should I also, what should I think? Should I see things? That's why I keep bringing crypto in, not just because I want to tell people to buy or not, more about, sharing your views.
Well, we've had an NFT bust. The NFT
did we?
bubble has bust. Without a doubt.
When did? I mean, before they've just
about officially about 3 weeks ago. But you could say, what makes you say that?
Exactly.
I would say the reason I can say that is that the transaction cost on Ethereum has collapsed. So the cost of doing an Ethereum transaction has gone from enormous sums to it's dropped by 90%.
So
now, if you look at the number of transactions, they haven't gone down. What has gone down is the minting of NFTs, and that appears to be what's caused the cost of transactions on Ethereum to drop dramatically off. And for me, I find that worrying. If I had lots of Ethereum, which I don't, I actually borrowed a lot, so I don't care where it goes. In fact, it might even make me money if it does fall. But the way that I've always seen Ethereum work is the cost of transaction goes up, and then the cost of Ethereum goes up. So you should imagine that if the cost of transactions collapses, which it has, you can check it on the net. Go to bitinfo.com and you'll see the transaction cost absolutely plummeted. And I like that because I'm constantly transacting in Ethereum and spending $200 just to get a smart contract to turn over. I find that, and doesn't everybody think that's ridiculous? But now it's like $14, which is still a lot, really. But that is a big change, and I think that's something that I'm very wary about the price of Ethereum, because in the past, up goes the price after the price of cost of transactions goes up, and now they've collapsed. One would imagine that the opposite might occur, but hasn't happened yet.
That's quite interesting point. So if the NFT bubble has burst, obviously NFT are going to be here to stay and explore more utilities, because that's one of the problem of NFTs.
Well, badly drawn artwork is NFT is a bust.
Yeah. So going maybe into the metaverse and linking that to perhaps the sandbox, keep signing deals with brands to buy land, open shops within the metaverse, how that fits into NFT bust and what is next?
Well, the thing about crypto is it doesn't just go up or it just doesn't go down. It goes up a lot and it goes down a lot, and it goes up a lot and it goes down a lot. I mean, it's just like Zach's favorite small caps, plus more so. So it's not that you go, well, it's busted, that's it, it's all over and finished. I mean, leave it 6 months and something, it will, or a year or 2 years or 3 years. I mean, I've got a load of crazy old crypto that I've got. I'm looking at it, go, I bought 10 grand of that. That's now $900. Well, that's not so good. But I'm not going to sell it for my $900 because I might come back 4 years and find out I'm a millionaire again. This stuff has massive upside and massive downside. And the only difference is there anything behind it? If you buy a coin called, I don't know, Twiglet coin, is there 6 geniuses behind it? They're going to make that the next big thing, or is it a bunch of Russians who want your money and are going to Mr. Leg over Mr. Runoff? And the difference between the two is the difference between losing all your money and making a huge fortune. And it's the skill of knowing the difference.
That's interesting. I thought that brands coming into the metaverse was kind of like institution coming into crypto last year. That was kind of like my thinking behind it. But yeah, well, let's see.
But if it's more than press releases, I mean, when I was a kid in technology, I used to read a magazine called Byte, B-Y-T-E, and it used to be like a thick, like really, really thick, and it always had on the front page something new was going to happen. Down the side, it would say multimedia. This is the multimedia issue. And I'd go through it and I go, oh, it's brilliant, it's brilliant. Oh, this is coming, this is coming, this is coming. And none of this stuff would ever show up because they'd send out press releases, and that's all they did. Send out press releases.
Exactly.
Yeah? And they never did it. If a really brilliant brand like Louis Vuitton has a really great idea in crypto and applies it, then it will be massive.
Yeah, but they are not applying it. They have this great idea. They keep putting out press releases.
Yeah, but that's not going to get anywhere, is it? If Pembo does a fashion coin, sunglasses coin. This is my new crypto glasses, crypto glass coin. Here you are. I've got the first one. Yeah, blah, 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 blah. Give me your Ethereum. It's going to be big. Thank you very much. Bye. It's not going to do anything, is it? I've got a load of marketeers behind me. They're writing press releases all day, until credibility is lost, or I decide that I'm going to go to Bermuda and disappear. And, you know, it's not going to work, is it? You've got to have the technologists. You've got to have the idea, and you've got to do it. And you've got to spend a lot of money and take a lot of time. And most people are just sending out press releases. And, you know, would highly marketing focused organizations who make all their money around hyping their low cost goods into high priced retail products, would they be the sort of people that would actually want to get something really difficult and dirty and technical? Or would they just prefer to sew leather together and try to charge £2 for it?
Yeah, exactly. Is there anything that you are perhaps looking that grabs your eye? You are interesting. You're quite good, Clem, in identify opportunity. I remember, you know, with DeFi, NFT, you are kind of the first one highlighting that. Is there anything that you see maybe sparkling some kind of
metaverse is going to be big, okay, but that's called massively multiplayer games, okay, and I actually put the word massively in that phrase back in the day in the 90s. They're massively multiplayer games, massively multiplayer online role-playing games, or whatever letters you want to put in front of it. Massively multiplayer games, online gaming, games, not gambling, are what the metaverse is. It's just a new word for an old idea. And they are already massive. But when you can actually monetize the internal game structure of one of those things and turn that thing from a theoretical economy into a real economy, because a lot of people spend core of their lives in those worlds. All right, they're looking through the window of their monitor, but they live in them. And when you can actually turn that from a fake economy into a real economy, that's a huge, huge, huge opportunity there for vast wealth creation.
Yeah, okay, metaverse. Okay.
And that's NFTs. That's going to be NFTs too, but those NFTs are not badly drawn art. Well,
no,
that's not why they're worth money anyway.
Well, we just need the experience in the metaverse to improve as well, because otherwise it's quite frustrating. Exactly.
Look, if you take a metaverse and you remove crypto from it, you've got World of Warcraft.
Yeah, but we have Zoom in a way.
But it is a metaverse. That's what a metaverse is. You don't have to have money involved. Crypto just enables the money, the real economic side of it. You don't even need crypto for that, actually. You can do it without crypto, but it's best if you do use crypto for one reason or another.
Yeah.
So, you know, monetizing virtual realities there's a huge amount of wealth that will be created by that.
Yeah.
And that's what crypto enables. NFT is an enabler, but there will be all sorts of other technologies that will enable that as well, or make it different, or make it better, or make it faster, or make it more lucrative.
Yeah.
Well, do you think this technology to keep the tech stocks or the NASDAQ, going high?
In the short term, NASDAQ's going to go into the ground, isn't it? But, you know, the history of the stock market is the history of technology.
Yeah, that's a good point. That's a good point. That's a very interesting point. Well, you see technology and then you see commodities. It look like they are two.
Well, commodities is the history of the commodity market. Technology is the history of the stock market. If you go all the way back to the beginning, when they were sucking coffee in Johnson's Coffee House, they were basically backing the latest technology of ships. And then it was the latest technology of canals. And then it was the latest technology of railways. And then it was the latest technology of cars and radio. Yeah. And then it was the latest technology of valves. And then it was the latest technology of transistors. And it was the latest technology of chips. And then it was it's always the latest technology. That is the tip of the spear. That's what everyone wants to play there. And that's where all the money is. But it goes up like a rocket and down like a rock. You know, that's how that kind of thing works. And we're in the down like a rock section at the moment.
Yeah, it doesn't sound very promising. Zach, you have any kind of small cap that, they are doing something great in this period that doesn't sound so exciting?
I suppose I'm just waiting for, obviously, the Ukraine thing to finish, if it's ever going to finish. I'm looking at the FTSE around its what's actually above its 200-day moving average, so which is quite a result. I think the real thing about the London market is it's so cheap anyway that even if there's a war or a nuclear war, the downside amongst the blue chips doesn't seem to be there. Doesn't it's just no. Downside was the FTSE went to 6,800, the worst part of the Ukraine crisis, which is where it was in 1999. So that it's very difficult for it to go, even though it's a sort of fake index compared to then, it's very difficult for it to go or stay below 7,000, almost like whatever happens, because you have, the Unilevers and you have the property stocks, and you have so many, companies in there, which are perennial stocks that, we're always going to use them.
I agree with that. And you can see it. You can see it if you put the FTSE against the S&P.
So it's a good time to short the S&P.
Well, I think it's generally a good time to buy the FTSE and probably sell the S&P and sell the Nasdaq. That's almost the way we're at. Either way,
that's good.
I think a lot of people are not set out to be shorters.
Yeah,
I can't do shorting. It doesn't fit with my psychology. You've got to be able to sit with your investments and see them turn to dust and not care, to be a good investor.
If you own, if you got a portfolio of shares, to go short of the FTSE at £100 a point, or £10 a point, or £50 a point, or whatever it is, to hedge your portfolio, I think it's a good idea. And so
it's a good idea, and you're probably comfortable with being short. But I know a lot of people just simply aren't comfortable. I mean, if I go a silly amount long, I don't care. If I go £10 a point short on the FTSE, I want to look at the price every 5 seconds.
That's true. That's true.
And I think it's important to avoid those things that make you go, well, this is what most people see in the markets, the drive to stare at the market all day. And I try to avoid that as much as possible. And with shorting does that to me. I absolutely get, and Forex trading does that to me too. And I'm sure if I'd bought wheat when I wanted to last year, it would have done it to me. That's exactly, if memory serves me right, the reason I didn't buy wheat was because I knew I'd be watching it all day long, every day, and watching it a little tick. And that's not good for your health or your investments. You've got to, if you're a good shorter, I mean, you have to be really good to be a good shorter. You have to be, there's not many people that can carry that. It's only pros like you, Zach, that can carry that particular style.
Well, I mean, when I did it, I love going short. I think it's a very nice experience, and obviously you could translate that to going short of cryptos as well. Last 6 months, they were, you just literally go short and just shut the screen and never put it on again. So it's been a great time for shorting, and it still looks as though it's the cryptos, if you are with shorting mentality, are selling to any strength, and that seems to be the thing there. And I suppose you'd think that the Bitcoin is more likely to fall from 40,000 to 30,000 than it is to rush up from 40,000 to 50,000. I can't see, and you probably can't see, what would get Bitcoin up to 50,000 at the moment. It just seems to be very, very heavy indeed. It hasn't broken down yet, but it just seems to be a very, very heavy market. And, with that regulatory noose coming through, I just think it's none of the regulators' business. I don't know how you can enforce regulation of crypto, really. Then it's a bit of a stalemate at 40,000, but you probably favour it going down now rather than up, just in the near term. So
I think you're right. It's a stalemate, and of course, when it breaks out of that stalemate, you know which way it's going to go for quite some time. So that's how I always trade these situations. When it's in that sort of, it's going nowhere fast, you know that if it breaks up out of that pattern, it's going to go a long way. If it breaks down for it, it's going to go a long way.
But the FTSE had, it was in a range of 7,000 to 7,500. It only broke below it for like a few days, and you would have thought, that's it, we're going to, the world's going to hell, and this is going right down. And it was the worst bear trap you could have. I mean, the FTSE is only about 100 points lower than it was before the war started. So the logic there is totally out the window, I think, in terms of what one would have expected, especially with the interest rate outlook, the taxes coming through here in the UK. So death by taxation next month, I think it's going to be. Just idiotic taxes on fuel and heating and all the other things there are. I think we really have gone, mad on all that, especially after wasting £100 billion on all the COVID stuff, and then taxing people too. I think it's particularly cruel of governments to do that. But we have a choice between a high taxation government and an even higher taxation government.
Yeah, well, we have to pay the piper for the actions taken to save the old people, everyone's grandparents, and that's the toll, isn't it? About 15% of your wealth. Yeah. And most people would be happy to pay that, given the choice.
Yeah, no, my old father is still alive and kicking, and so I won't get to that.
Well, I mean, you'd be happy to spend 15% of your wealth to keep your father alive, and I mean, even if that is only £67.50.
I would give all my money away to.
Oh, Zach, that's so nice.
Well, I think for me, that's what I think about when I think about everything that we've gone through in the last 2 years. Is that if anybody, I don't know anybody, if you said, what would you give to save your living parent or parents? They'd all say everything. Well, actually, it cost us 15%. That's not so bad, is it? It's not a bad trade. Because boy, 1 in every 4 of those people over 80 who would have got it would have gone. And they haven't. If you look at the numbers, the amount of people that didn't die, and they would have all been the people over 80, pretty much. It's there's about 1 million people that didn't die, and that would have all been old people.
It is amazing. I think my father obviously has is a diminishing band of friends, and a lot of them died. A lot of them died of COVID, or that's ill and then got COVID, that kind of thing. So I think it's been a miracle in that way. But the operational side of the testing and all that stuff, I think, was very badly handled. That part of it. There was a lot of money wasted. Where ironically, probably the vaccine creation was not an expensive process.
Well, if you're prepared to pay more than 15% for the survival of your father, no money was wasted, was it?
That's fantastic. So I think that
look at the bright side, Zach. Look on the bright side.
Thank you for your optimistic. I can bring people back from the as well with money. Regenerate them with genetics. That'd be fantastic too. Start off with a woolly mammoth and then go back to humans as well. So there we are.
Okay, do we maybe want to leave the viewers with some kind of ideas or kind of like...
I've got 2 tips.
Tips, yeah.
I got 2 tips because I know that's really what people want.
Yeah, till the end of the show, Clem.
So the first one is really, really spicy. It is spicy, and it could rip your face off. So you're going to love it. Now, there's a company called Petrofac who had rather dodgy business practices of bribing their way around contracts. And they got pulled up by the Serious Fraud Squad and got in all sorts of trouble about it. And their share price collapsed. And the Abu Dhabi government, who they were getting a lot of their business from, said, we're not touching you again with a 10-foot barge pole, go forth and multiply. And yesterday, the Abu Dhabi government said, okay, you can come back now. We'll let you pitch. So they went up 10 or 15%. But when you actually look at, they're oil people. They fix you around, they drill holes for you. They get you rigs here and there and there. They're oil services company. Okay, so if you take them, they have a 3 billion sales, give or take. That's their trading, and a market cap of 600 million. So that's roughly £5 to turnover for £1 pound of market cap. Now, if you went to someone like Hunting, who is a very similar sort of business, they have a 1 unit of turnover, 1.5 unit of market cap. So they're 9 times.
The company, sorry,
is Petrofac, PFC.
Yeah.
So basically, they went around bribing everybody for business. They got caught by the Serious Fraud Squad, got hauled into court and sued, and all the board resigned. They brought a new load in to clean house, blah blah blah. Put that on 5 years.
Oh no, sorry.
Not yet. Yeah, that one. And you might even want to stretch it more. That's not stretching it, but anyway, yeah, go down to the bottom there where it says 2017. Yeah, now do that. Yeah, okay. Yeah. So you can see that, you can see where it dropped out of bed, and you can see where it is now. Yeah. So it looks like you think that it's a strong possibility that they're now going to get rehabilitated. Because if Abu Dhabi have said, we think that you've done your housekeeping and we're going to let you back, then in a world where oil is going to be, that people are going to want more, then that's going to be a strong, that's going to be your ultra spicy opportunity. Let's just put it that way. Yeah. So another one in oil is EnQuest. So that's North Sea oil, and of course, if this mess doesn't sort itself out, and I can't see how it will with Putin if he survives, then the UK is going to want its North Sea oil, isn't it?
Yeah, exactly. There's going to be
so that's going to be quite a good one. And then finally, because I get emailed by PR people all day long because I write for Seeking Alpha and for Forbes, I finally got something that's actually quite interesting. The Royal Mint has an ETF for gold. I love gold. There's a Royal Mint ETF, and there you go, Royal Mint ETF, gold ETF. That is one for you if you want to get some gold ETN. It's one of those ones that's really difficult to find. If you type, I have no idea what you type to find it. I must have it around here. RMAU. M for mother, A for apple, and U for uniform.
Yeah.
And it's listed all over Europe. Yeah.
Oh,
there you go. Royal Mint Physical Gold ETC. Yeah, it's not been going that long, but it does really tightly track the value of gold, and it is the Royal Mint after all.
Interesting. That's very interesting.
Yeah. Yeah.
Okay, some really nice tips, Clem. Zach, what do you have?
No, I've only got one thing. Just I think I mentioned it before. Just the FTSE. I think that it's going to go. I think it's a buy above 7,200, and that's my trade. I suppose it depends. It's relying on Ukraine being resolved, which obviously is a big ask. But I think it should be much stronger than it could have been, and I don't think it's an overvalued market. So just the UK stocks, blue chip stocks, is my one. So I don't think there's anything else that stands out for me at the moment.
Well, I've got a question, because normally, if you want to know what's going to happen, first of all, you have to find the important question, and then you've got to answer it. But I've got the question, but I don't have the answer. The question is, how is this Ukrainian thing going to resolve itself? Because if you look at the market says, oh, it's all done dusted. That can't be right, in my book. The only way, if Russia leaves Ukraine, there's still Putin sat there menacing the whole of Europe. So that's going to be a nasty rearmament, just a total cluster, you know what? Yeah. If he cuts Ukraine in half, well, that's even worse. If he conquers the whole of Ukraine, that's even worse, right? So the only way it can go back to any sort of normality, i.e. Russia not under sanctions, Russia not stopped from exporting its fuel, Russia not stopped from exporting its nickel and all its raw materials and its wheat, blah, 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 is if Putin goes. So the only way that the market should be priced like it is today is if the market knows that Putin's toast. And I can't see how they can, anybody, even in aggregate, can imagine that.
Yeah, but Putin is not going to get toast on his own. He's like,
but if he's not toast,
you need to get toast.
The market's in bad shape, and gold will go through the roof, and oil will go through the roof, and all the military contractors will go through the roof. And if you look at the military contractors, and you look at gold, and you look at all those things that should go through the roof, and went through the roof when this all kicked off, they've all pulled back 50%, which says that this is all going to be resolved. They didn't move very far in the first place, and then they've all pulled back the largest portion of the way.
Well, I mean, I totally get what you're saying. I can't say I disagree with it either. But it's one of those things that maybe the market is also saying, which is the sort of the very cruel way the market works, is saying that actually it doesn't really matter that much.
Well, it does if you've got a lunatic on your borders
lunatics everywhere. We got the North
That's
Korea.
a point.
Not with 3,000 nuclear weapons.
Well, yeah. Well, then we're all toast. So
that would get written into the market, and the market's writing out Putin right now. Is writing him out as he's going, and I can't see how it could know.
But I think the positive, Zelensky saying we concede that we'll never be part of NATO. So that was, I mean, in a way, that wasn't the end of the war. It was the beginning of the end of the war, because all it'll be then is guerrilla warfare. It won't be, which could continue for years, let's say. But we can apart, as long as you're not in Ukraine, you can handle that. We have guerrilla war for years, but that's all it is. It's just basically.
They're not going to unsanction Putin. They're not going to unsanction Russia, and therefore all that gas and all that oil and all that rearmament is guaranteed. And that isn't priced in. That output isn't priced in.
Yeah.
Famine in large parts of Africa because they get 40% of their food from Russia and from Ukraine. That's not factored in. All the things that aren't factored in are if they should be factored in if Putin stays on. And it's like, if you look at the price, it says Putin's toast, and I can't see how that can be highly likely.
Yeah, but if Putin was really toast, the FTSE would be not at 7,300, it'd be at 8,000, because people go berserk. I mean, if this was resolved like that, the market would go absolutely bananas.
Well, maybe that's the answer. I don't see why the FTSE would go any more bananas than 9 months ago than it would after Putin left. I don't think the market was worrying about Putin 9 months ago. But anyway, you could be right, because I haven't got an answer to my question, and your answers may be correct.
Well,
and I can't. What I predict is this: in 2 or 3 days, you're going to see gold and oil go wham.
Wow, we wait for that, Clem.
Or Mr. Putin.
Yeah, but that implies something very bad is going to happen on the ground.
Well, the bad is nothing happens. Nothing changes is the bad. Because the change is already priced in. What I'm saying is a change for the much better is already in the market. And if it doesn't change for the better dramatically really soon, it's going to reprice
down.
That is going to be really, really bad. Yeah. There's a massive amount of hope that this is all going to go away. Now, I actually have staying with me 5 Ukrainian refugees. And they also are hopeful that they'll be able to go home in days, small weeks, which is, I feel for them, because I think, that there's no chance.
Yeah.
But I think, in a sense, the market is like that. It says, no, bad things can't happen. No, really bad things can't happen. No, it's all going to work out. And that's priced in.
It's a bit like 1939 or something like that. It's like we could be in that, which means we've only got another 6 years to go. But autumn 1939 is sort of, you've got had action, but we would be in October 39.
Well, there's a story about an English general at the front line of France and Germany in the Phoney War, and there's a German on the other side of the trenches hanging up his squash, and the English general says, "Why are you shooting at him?" And the French general said, "He might shoot back."
God.
Yeah, that's where we are. We're exactly there. Thank you for that.
Exactly. Okay, let's see what's happened over the next week, and then we can maybe talk more next week.
Okay.
Keep buying gold.
Okay, another tips at the end. Clem, thank you so much. Zach, brilliant to have you on today, and thank you everybody